Hello everyone, I just want to talk a little bit today about shifting market environments and my trading style relative to market environments and all that good stuff. This is coming in response to a question from someone who's in their first few years of trading. Things were going really well in 2021, started to slump a little bit, or the start of 2021, started to slump a little bit, the second half of 2021, and now the last couple of months struggling a bit and trying to pinpoint what the issue is. So for me, it's always the first things first. Has anything changed in your life? Are things changing in your routine? Are there outside influences that are impacting your trading? If the answer is no, I'm doing the same thing, the answer for me, the most of the time, is then a shifting market environment. So whatever your trading style is, it is suited best for a certain kind of market environment. So for me, I know that my trading style is best in a clear bull market because number one, it's obviously easier when things are going up, but I love playing oversold bounces. So whether I'm playing oversold bounces on the 5-minute time frame in a back burner trade or playing them on the hourly time frame, that is when I make the most money. When it's a bull market and I'm playing oversold bounces as a part of that bull market. So I know that anything less than that is not my ideal market environment. I can still make money playing bounces in other market environments. For example, in 2018 cryptocurrency, only playing bullish, I was still green on the year, even though it was a real brutal year. And that was just by playing bounces on the way down because there were big bounces as a part of this drop, 4 or 5 week moves here that were 50% bounces. So that requires adjustment as well. Okay, we're not in the same market environment, different time frames. I'm not using the 5 and 15 minute time frame anymore. I'm using the daily, the 12-hour, and the 4-hour. So I adjust the time frames that matter most to me. But it's recognizing the change in market environment that we need to know when to pump the gas or when to pump the brakes. So for this individual, they were trading well in this market environment, which includes some bears. Again, the first thing I look for is, was it just all a bullish market environment and now we're no longer bullish and you're struggling? And that would obviously mean trading bullish less, focusing more, trying to learn more to trade bearish. But I can see that there were, some bear periods in there. Of course, the CVID drop. But it was a very clear trending market. It was all bull, it was all bear, fast and hard, and then it was all bull again. And now, over the last 5 months, we are chopping around. And we're essentially at the same levels we were back a few months ago when this individual started to struggle a little bit. But it just shows me, again, this what is circled here is way choppier and way less clear than anything preceding it, whether bull or bear. Even the pullbacks on the way up, just a clear little 4-month or 4-week pullback, a clear little 3-week pullback. But again, very clear and directional as opposed to chopping around and giving it back and all that. So the key is knowing when to pump the gas and when to pump the brakes. In the current market environment, in both crypto and stocks, I'm pumping the brakes because this is not my ideal environment. And I have proven to myself over the past decade plus, I know what my trading style is. I know the market environments where I make my most money. I know the market environments where I give profits back. And so it's recognizing, okay, this is my market environment where I make money. I'm pumping the gas and I'm going more aggressive. I'm trading more often. I'm using larger position sizes. And if it is a market environment that is not my ideal, I'm trading less. I'm pumping the brakes. I'm more picky. My dollar volume that I'm trading with is much less significant. So it's not obviously easy to be able to say, okay, the market environment is shifting right when it does. Oftentimes, we see it in our performance. So I can be trading a certain way and it's working really well. And then that same trading style starts to not work so well. And I start to give back some profits. And when I recognize giving back some profits, I say, unless something's changing in my life outside the screen, the market environment is probably shifting. And so then I recognize that and pump the brakes. Because for me, the most important aspect of trading is preserving my capital and keeping my gains. And I don't care if I have to sit on my hands for 6 months and wait for a market environment that favors my trading style. I know it will happen eventually. And then that's when I go aggressive again and look to make my gains. So that is how I approach the market. And right now I am in patient mode and trade less mode because the market environment has shifted significantly over the last handful of months. And we will gain clarity, whether it's bear clarity or bull clarity, we will gain it at some point later this year. And then I will turn up the juice a little bit and trade a little bit more actively and a little bit more aggressively. But it's the constant recognition of pumping the gas, pumping the brakes to ensure that we are not giving back too much. Just as another example, so in the stock market world, when the Canadian cannabis sector was exploding back in 2018 and seeing this blue sky breakout run and just a massive move up and plenty of strength, and what we were seeing was a common pattern of a strong close and then a gap up open. And that was a specific trading style that fit this market environment. It fit this blue sky euphoria market environment. And so in that market environment, I was swing trading position sizes that I have not done since. They were the largest swing trade position sizes I've ever taken in the stock market. And once we hit all-time highs and topped out and the market environment shifted, I have not taken position sizes that large again in the last 4 years. If I get another sector that does something similarly, I will go back to having position sizes of that magnitude, or at least something similarly. So that is just an example of pumping the gas, but then pumping the brakes. Recognizing trade setups and market environments where a certain style is favorable, and aside from blue sky breakout euphoria, I will never take that trade style because, again, it would be detrimental. I would be losing a ton if I were doing that trading style and it was not a blue sky euphoria market. So just a specific example of recognizing a certain market environment and then not trading in that manner when that market environment shifts.